Hi, Dean Jenkins with Follow Me Trades, and as promised, I will show you a quick and easy way to improve your payout ratio on your trading, which will help with your overall profitability and your results. And I also promised I would show my actual trading results. I post the results on my website here, followmetrades.com. But here are my actual results tracked on this spreadsheet. Again, I publish them on my website. 2023 year to date, 36 total trades taken, and I'm currently at a 50% win ratio. It's been a tough year. Last year was down. We started this year down. Then it went up. Now it's starting to pull back. We got inflation. We got the Fed raising rates, and uncertainty. It's been a little choppy. So tough trading. Sometimes it's like that. 50% win ratio, but here it is, 2-to-1 payout ratio. So you can see my average trade size here, the amount of capital I put into trades. Just select all that. 1464. So around that, $1,500 capital in the average trade. One half of them, 2-to-1 payout ratio, and made $10,900 in profit so far this year. So pretty good results, and different years we do better. A lot of it depends on market conditions, but if we use this system I'm showing you, it will help with your profitability. So how do we do that? So I'm showing you a trade here. This is USO, the oil ETF, and if we zoom out real quick, right? Oil last year peaked. USO was up about mid-90s, 95. Pretty good pullback, and now it's starting up again, and I believe it has a good chance to go higher. It's on an uptrend right now. So let's zoom into current price and see how we set this up for a good reward to risk on the trade. So here's current price. We've taken entry 71.98. And what we need to do is have an exit point. I'll avoid using the term stop. Some people don't like it. They imply a stop market. What you need is a predetermined exit point. So you're going to get out of the trade if it hits that point, right? Trade's failing. And at this point, we're going to use the last support level, the low point where it reversed. Because if it goes below that, then this uptrend is failing, and it's probably going to go lower. So we'll exit at 71.29, and then we need a target. Where could it go to in the short term for a swing trade? And we just use the last pivot point, the resistance level. Where did it go up to and reverse? And I've drawn a green line, and that's up at 75.36. Now, if this trend continues, it could go higher. That'd be great. We'll stay with it. We'll maximize the win. But if it fails at that prior pivot point, that resistance level, would the trade be good? Well, we just visually look, right? Here's the distance entry to stop. Here's the distance entry to target. This is bigger. We can put that on a spreadsheet. We can quantify that. Here it is, USO trade, entry 71.98, target 75.36, exit 71.29. If it loses and hits that exit point, I lose 69 cents per share. If I hit that target, 338 in profit, that's a 4.9. Call that a 5-to-1 reward to risk. If it wins, right, I'm going to make 5 times more than I will lose if it fails. That's the kind of trade I want. Now, you need to qualify the trade with your indicators, your setups. Once you've done that, you want to check this reward to risk ratio on the trade and make sure it can win bigger than it would lose. And let's contrast that with another trade that I kind of like, but we're not taking because it has a poor reward to risk ratio. So here's Pfizer, and today Pfizer was up, had a good day, nearly 3%. The whole healthcare sector is up. Pretty big pull down so far this year, but it looks like it's finding a bottom, starting to head up. Big day today. Let's drill in, look at the details of this particular trade. Okay, like I said, big up day. We got a bottom, got a high, higher low, new high. Looks like a trend is starting, but same concept. If we were to enter here at 36.51, right? What was the last support level that if it breaks, the trade would be failing? 34.95, and then the last resistance level, where it went up and failed, that's at 37.80. And look at the distance here from entry to stop, or entry to exit, entry to target, right? This is bigger, this is smaller, and again, let's quantify that on a spreadsheet, right? So we enter 36.51 at that target, 37.80, the exit 34.99. If I lose, if I hit that exit point, I exit the trade, I'm going to lose $1.52 per share. And if I hit the target, it's 129. This is smaller. It's a payout ratio of 0.8. So I have the chance to lose more if it fails than I would win if it succeeds. So for now, it's a scratch. We're not going to take it. Now, if it gets above here, we got a new resistance level. Could be bigger. Could qualify. So I could take it then. So that's something you can apply to your trading right now, regardless of the setups, the indicators you're using. Once you've qualified a trade, you think it has a good shot, you like it, apply this concept of reward to risk, have an exit point, have a conservative target where it could fail, and make sure you got a good positive reward to risk ratio on the trade. And as I showed, I'm getting good results in my trading using applying this concept. So if you're interested, I've got an offer where you could learn an awful lot more and follow along with the trades that I'm taking. If you just want to apply this, that's great. Go do it. Hope it works for you. I think it will. It's worked for a lot of people. But click the next link and I'll show you an offer where you can learn a whole lot more and follow along with my trade.